And Shamu from IG in Melbourne. Stan, good to see you there. Just firstly to the equity markets, what's your opening call for the ASX 200?
.6% today at 5,230. Now, of course, yesterday's close above 5,200 has really been positive for the Australian market. That was a key resistance point for the market, and this might really open up a move towards those years high in the 5,250 level. So I think a lot of analysts will now be talking about whether or not we'll start seeing some profit taking at these levels. Of course, we've had a pretty good run in a short space of time, so this obviously will prompt such conversations. But of course, considering the fact that the resource names didn't really participate in the previous rally, which was earlier in the year, and they were in fact underperforming the market quite significantly, then we can only feel that this improvement we're seeing from China especially will be positive for the miners in the short term, and possibly this would see the Australian market have enough strength to finally break through those years high in the 5250 region. Of course, we've got the likes of BHP, Rio and Fortescue now knocking through, or punching through rather, some key resistance levels, and at the moment we're actually calling our BHP's ADI is just actually suggesting the stock will be up 0.5% at 36.05 for the open, so that's a trade through $36. Fortescue traded through that $4.50 mark yesterday as well. And we've got Rio Tinto approaching that $63 mark today. So it really does look like it's all about the resource names and, of course, how they will respond to this significant improvement we're seeing out of China. And, of course, we also have the Japan factor, of which Japan's our second largest trading partner. And they just recently won that Olympic bid, which means they will probably be boosting their infrastructure spend. And this is likely to continue to lift some of the mining companies and sentiment around them as Japan looks to prepare for those Olympics. Of course, we've got some slight concerns for the market, particularly with the Aussie dollar now looking like it's in good stead in the near term. And of course, we've got the reduced scope for further easing this year, just particularly because of improving global dynamics. So those will be a couple of negatives to look out for the local market. But at the same time, we've got gold, which is losing ground. So this will probably weigh on some of the gold names, but they've had a fairly good run as well over the past few weeks. So just a bit of tapering off in the gold space is probably warranted at the moment. But overall, I think the best strategy will be buying the dips on the local market. It's quite clear that we're in for a good recovery in the short term, but of course, getting in and where to get involved in this run is probably where what's going to be the trickiest part of it all. And of course, that fear of missing out is likely to accelerate as well when investors wake up to see that we're already at within 20 points of the year's highs, and this could be something that will extend in the short term.
What about the Aussie dollar there, as you mentioned, above 93 US cents? What's your sense on the next level? We've heard a lot about that 93.50 mark being a key resistance. What do you think we'll see?
Yeah, in the forex space, we're definitely seeing significant Aussie dollar short-term strength, and of course renewed Japanese yen weakness. So those have been the two most interesting currencies in the FX space. For the Aussie versus the greenback, of course, we're back above 93. It does look like we're going to be testing that 93.20 to 93.40 resistance range in the short term. Not much on the data front today. We've got Westpac consumer confidence due out at 10:30, but of course I think we'll probably be a bit range bound today as investors look ahead to the jobs number tomorrow. Of course, it's expected we're expecting to see unemployment tick a bit higher to 5.8%. That's another 4-year high. So this will remain a bit of a concern for investors out there. But of course, it's quite expected that the jobs market here has been deteriorating. So if it's a situation where we still get that 5.8% unemployment rate, but a bit of a surprise on the jobs added front, then this could be enough to justify a continued rally in the Aussie dollar in the short term. And in that case, we'll probably see a new trading range for the Australian dollar, possibly between that 93.50 and 95 level in the short term. And that's probably where we might see the Aussie dollar trade until we get a bit more clarity, particularly from the tapering perspective. But at the moment, it looks like the market's really now getting comfortable with this tapering issue. And of course, with Syria concerns waning, then risk should remain with a fairly good tone heading into the end of the week. And from the Japanese yen perspective as well, we've seen some big moves, particularly in the dollar versus the yen, back above 100. This should be supportive of the Nikkei today. And we're really looking at that cross between the Aussie versus the yen because of this renewed Aussie dollar strength and renewed Japanese yen weakness. That currency pair is above 93 now, and it should continue to see some buying momentum in the short term as well. So there's plenty to look out for from those two crosses.
Absolutely. Thank you so much for that, Stan Shamu there from IG. Let's get some more on that Syria situation. Syria has apparently agreed to a Russian-led initiative to hand over its chemical weapons stocks to international control. As US President Barack Obama argues the case for military intervention, Britain's